Where are the Perth property hotspots? It's a video I created here on YouTube in April 2023, and man, have things changed since then. If you had have watched that video back then and taken some action and bought a property, back then you could buy properties for around 5 to 550,000, and now those same properties you're looking at anywhere from 650 to $700,000. So there's been a massive increase in the prices since then, which we're definitely seeing in the data. In today's video, what I'm going to share with you is Perth still a hot place to buy? What's going on in the market? What am I seeing on the ground? The data is great, but the reality is that it is a little bit out of date, and therefore you need to know what's going on the ground to know whether it's a good place to buy. But I am going to refer to the data. We're going to look at the macro environment to see what's going on, what factors are actually interfering with house prices or could actually impact it in the future. I'm also going to talk about the hot spots and also the not spots of where you could or should not buy in Perth. And could be really vital information for you. So if you're looking to buy in Perth at the moment, do stick around. The other thing is that while I am based in Perth and we buy for a lot of clients in Perth, we actually buy for clients nationally. So this video is not biased. I'm not trying to say to you to buy in Perth. I really want to present an unbalanced point of view and refer to lots of information so that you can make the right decision for yourself. The other thing is when we're looking at property markets, the thing is there's lots of markets within markets. So a lot of these comments, they're going to be quite general, but it's important that depending on what your budget is, what your strategy is, like if you're doing renovations or if you're doing subdivisions, etc., there are other ways to make money from property, not just the old buy and hold method, which you really need to rely on that growth and cash flow to sustain it. So stick around because there's going to be lots of gold nuggets for you. And in the comments, feel free to ask any questions. There's going to be a lot of points of view on this. I'm just going to share you the information as it is. So again, you can make the decision for yourself. Bit of a background. So that video I created in April 2023, it's had over 37,000 views and tons of comments. So if you're one of the people that actually back then took action and bought a property, I'd love to hear how your property is going. And for those of you who are just new, then you can actually watch the video if you like. You can click the link below. I'm going to share it down there. But let's get into what the current situation is right now. And we're going to talk about things like population growth, the building approvals, where's the economy at, mining, is that actually a risk to your property? Because a lot of people are saying that the iron ore boom is actually ending and because the prices are going down. But how's that actually going to affect Perth? And what else is going on mining? Because it's not just iron ore. And then also what's going on with international migration and how is that impacting house prices? But also, is it easy to rent your house out right now in Perth or is it taking a little bit longer? These are some of the questions that we're going to talk through and answer in today's episode. Little quick note that down below I've got a link to our property investor readiness quiz. So if you're new to property investing, you can actually do this quiz and it's actually going to tell you some specific feedback on areas that you may need to improve to get yourself ready to take that next leap. And also, if you have questions about what we're talking about today and you're actually considering using a buyer's agent to help you buy either in Perth or nationally, then feel free to book a call in with me directly. So let's dive in and take a look at the data. First things first, we want to take a look at the demand. And if we take a look at the most recent data from ABS, we can see that the population growth in Perth was 2.8%, which is quite significant growth compared to the other states. And I think this is really driven by the fact that if you look at this one, you can see that the international migration was really, really high, although we are starting to see that cool off. And of course, that's because the federal government has tightened population growth, so there's less people moving to the country. But I can certainly see if you were moving to the country and you had no family anywhere, you'll be wanting to find a place where there's employment, decent price housing and rentals, and also has a great lifestyle. And you can see why a lot of people were attracted to Perth. Take a look at this data, which is from a local property manager, and you can see that in November 2023, about 61% of applicants were actually local and then 39% were from interstate and international. But if you fast forward to November 2024, you can see that 91% of applicants were local. So what this is going to suggest is that the population growth from interstate and also international migration is certainly slowing down. So those growth numbers that we saw from the ABS, we may see when the next batch come out, that's actually going to be a little bit slower. The next thing we want to look at is the supply side. How many properties are actually for sale? And this shows you how many listings there were and then what the median selling days were. So you can see here, historically, it's about 8 to 12,000 properties for sale. And then if you go forward to last year, you can see that that dropped down to around 4 to 5,000 properties. And the selling time was about 8 to 10 days, which is very, very quick. But if you now look at January and February, you can see there's a little bit of a spike in January. There's a bit of seasonality to that as well. It did drop down a little bit in February, but you can see that the median selling days is starting to increase, and it's sitting around 14 to 16 days. And it does, of course, depend on which suburb you're buying in. But this is something you want to watch, because if this starts drifting up a lot higher, then that's going to mean that the supply is increasing, which means that buyers are going to have more choice, and therefore the price growth may stagnate. Where are we sitting right now? Well, this shows what is going on this week in the property market. We can see there's 3,174 houses for sale, 1,213 units, and 644 blocks of land. If you consider that a population of 2.1 million-ish, there's not many houses for sale, right? And this week we had 5,031 in total, which is a little bit higher than 4 weeks ago, but same week last year there was about 4,000. In terms of supply of new properties, this is where there's a big problem. There's a shortfall predicted of about 15,000 houses in 2025, and this could actually extend to 60,000 houses by 2029. This means that there's not a huge amount coming, although this does depend on the area. There's a lot of supply in the northern suburbs and the southern suburbs. That's something that I'm going to talk to you about in a second. But the other thing is that WA government's actually incentivizing tradies to move to WA. They're offering a $10,000 payment. That's how desperate they are to construct houses. And it seems like with the material costs and these labor issues, it's unlikely going to resolve anytime soon. Let's look at what some of the other experts are saying. Now, Heron Todd White, their national valuation company, and what they're saying is Perth is still a rising market. They don't believe it's approaching a peak. Of course, there's markets within markets, but they still believe it's in a rising market. This is the Christopher Housing Boom Bust report. And basically, we've narrowed it down and we're in scenario 3. So they're actually predicting that this year is going to be a huge rush of people entering into the market. And they're predicting that Perth will grow 15 to 20%, which is the strongest out of all of the capital cities. And this is based on population growth and also the rate cut that just occurred yesterday. On the other side, KPMG, they're a little bit more conservative, and they're saying that Perth's going to grow at 4% and 4.6% next year. So they're saying that even though it's going to be the fastest growing of the capital cities, certainly a lot shorter of what the other experts are saying. Given that the interest rates have just dropped yesterday, I feel like the demand is going to come back, certainly at the affordable level, because people are going to have increased borrowing capacities, and they're also going to have confidence in knowing that their costs are not going to increase, and in fact they very well could continue to go down. If we look at the population growth, we also need to zoom out, right? Because when we're buying property, we're talking about what's ahead for the next year, but we also need to see what's ahead for Perth as a capital city in the future. This is from the Centre for Population, and you can see that Perth, we're looking at having an increase of 500,000 residents. So that means that the population will head up towards 3 million, which is a huge amount of new people entering, and they're all going to need places to live. If they're not building enough, well, there's going to be a shortage of properties, which is naturally going to boost house prices. If you actually compare this to some other cities, for example, Adelaide, Hobart, Darwin, Canberra, and even Brisbane, Perth is actually punching its weight in terms of the percentage of population growth. It's actually stronger than these capital cities, Sydney and Melbourne, in terms of a percentage amount. As a state, the WA economy is in a really healthy position. And in the Commonwealth Bank report, which came out in December and January, it's actually painting WA as number 1. And it's saying that this is due to the relative population growth, also the housing price growth situation, and also retail spending, meaning that people feel affluent, people have money, they're out there spending money, and the state economy is doing quite well. The other thing is that state government debt in other states, especially New South Wales and particularly Victoria, is incredibly high. So if you look at this is gross debt per capita. You can see WA is very, very small, like less than $20,000 per capita. If you look at other states like Victoria, you're up at about $35,000 per capita. In terms of the money the government has to spend on infrastructure and services, the WA government is in a very healthy position, which naturally is going to flow through to the economy and to the housing market. I also want to paint a picture of what the employment situation is like. And there's people talking about iron ore price dropping and how that's going to interfere with the property market. This is a report from the mining industry saying that there's actually going to be a surge in demand for workers. They need about 11,000 workers, and this is all in this report here, 11,000 workers to put all of these projects, bring them to life. And you can see there's 48 projects, they need 11,000 employees, and they're primarily driven by energy, gas, LNG, and oil, and there's 7 projects in gold. I'll talk about gold in a second. So iron ore, there's only 5 projects, and then all the other minerals, there's a range of other projects going on. So even though iron ore is a strong contributor, there's actually other mining going on and resource sector investment that's actually going to drive the WA economy. Let's now look at how many people are actually employed in mining. 46% of people are employed through the iron ore industry, 23.6% are in gold, and then the remainder, they're employed in all those other sectors. And with all these new projects coming on, this of course is going to change and be less reliant on the iron ore. So the iron ore price, it certainly, it did peak in around 2021, and you can see that it's kind of dropped down and it's yo-yoed up and down, and now it's kind of sitting at a average kind of price. So certainly not in boom times right now when it comes to the iron ore price. If we look at employment, you can see that during the COVID times, 2020 to 2023, we had a bit of an increase in the iron ore employment. So we're sitting at around 60,000 people right now, which really the population of WA is roughly around 3 million. So 60,000 people, it's not a huge amount if you look at it in the big picture. But of course, these people, they're getting paid good money. In terms of the actual demand in volume for iron ore, you can see that it's actually quite consistent. And even the forecasts that the state government have produced, they're saying that it should remain quite consistent. So what does that mean? Well, look, to take the iron ore out of the ground, I'm no mining expert, but I would say that to do the same amount of work, you need the same amount of people, right? They're still going to need people to take the iron ore out of the ground. However, what we need to watch out for is if the mining companies aren't making as big a profits, they may slow down their spending, so no lavish lunches, things like that, which then flow on into the economy. The other thing to note is gold. Take a look at this. From 2024 through to today, the price of gold has absolutely just skyrocketed, and it looks like it's continuing on an upward trajectory. So what does this mean? Well, look, if I was a mining company and you could see that the price was growing, well, that means that supply is going to increase, which means you're going to need more employees to actually make those gold projects happen and to take the gold out of the ground. In my opinion, and so what I can see here is I feel like the gold employment is going to increase. So anyone who may lose a job in iron ore, then why wouldn't they go and work in gold? Forecast from the ABS, it actually shows that they're forecasting that the actual dollar value of iron ore is definitely going to drop. So you can see here that it was sitting at about $140 billion, and now they're forecasting into 2025 that it's going to sit at around $100 billion, which is quite, a big drop there. The other minerals they're saying are quite consistent, but given the price, the fact that gold has actually gone up, one would think that they would invest more money in gold to take that out of the ground and make more money. But as I said, this is the dollar value of the exports, right? You still need the people to actually take the iron ore out of the ground, but they're just doing it at a lower price. Let's take a look at the house prices around the country. Now, Perth, the median house price was sitting at $863,900, which is short of Brisbane, which is at 915,000. We've got Melbourne at 890,000, and we've got Sydney at 1.233 million, and Adelaide $815,000. So Perth has sort of shot up there, and it's now overtaken Adelaide, and it is also just short of Melbourne. Now, when we look at median house prices, I don't always like to look at them because it's different as to what's going on the ground. The reality is in Perth, you can actually buy a house that's within a 15 to 20 minute drive from the CBD that presents fairly decently for about $900 to $1.2 million. Now, a lot of these other cities, it's impossible to buy a property that is actually that close to the city at that sort of a price. So when we look at these numbers, it's not really comparing like for like. Certainly in Melbourne, for $1 million, you're not going to get much in terms of proximity to the city, in terms of land size and the quality of the home. The next thing we want to look at is how much money do people actually earn? And this is the thing, ACT is in territory of its own, because given the fact they've got a lot of government employees, it kind of skews it a little bit, and so does Northern Territory. But Western Australia as a state is actually the highest paid state in the country, which is it's $100 per week ahead of all of its other cities. When you're buying a property, the other thing you need to consider is the cash flow situation, because a lot of people are like, okay, well, I've got my money, where am I going to buy? Should I buy in WA? Should I buy in Victoria? So we need to look at the cash flow situation as well, right? Now, the thing is, Perth yields are actually quite strong. We're sitting about 4.2%. Every property is different, but this is just the average. So 4.2%, which is quite healthy. A lot of the other capital cities, you're looking in the threes, which means that holding the property can be quite expensive. I feel like given that the investors are starting to move on from Perth, I feel like that there's going to be less supply of rental properties coming up. And in some areas, we may see the yields remain quite consistent and actually grow back to higher levels just for the fact that there's not much to rent and there's still people moving to WA. There's the data and the macro environment, and it certainly paints a really interesting picture, doesn't it? I mean, some of the experts are predicting really high growth of 10 to 15%, while other experts are a little bit more conservative. So I'm really curious to see, based on what I've presented, what do you think is going to happen? Think is going to happen for Perth property in the future? If you want to pop in the comments, love to get your perspective on what you think is going to happen. But from my perspective, I feel like certainly price growth is going to slow down. I feel like that population growth may slow down a little bit as well. And also the rental rate increase is going to decline as well. However, I feel like the growth is going to become a little bit more sustainable. It's still going to be worthwhile buying if you buy right and buy in the right area in the right type of property, but you do have to be a little bit careful now. And now I'm going to actually dive in. I'm going to show you a map just to give you a bit of a background of the suburbs and certainly areas that I would buy and the areas that I wouldn't buy right now. Back when I talked about properties you could buy at the 5 to 600 price range, we're looking at places down south here. We're looking over here, and we're also looking in the inner suburbs down here, up through here and up through here. And there's been a huge amount of growth in those locations. We're talking 20 to 30% growth. And certainly in the inner suburbs, which are a little bit more unaffordable, they've also had really good price growth. Now, at the moment, the situation we're seeing is these northern suburbs up here, there's actually a huge amount of supply coming up. And that's because during the boom time, there was people selling house and land packages. And now that the builders are starting to get back on track, we're seeing a lot of investment properties come up for rent. On properties that you may have purchased at 750, 800,000, they're getting rents of about 6 to 650. And some owners are having to drop the price to actually get tenants in. So up there, it is a little bit risky right now. And I feel like price growth is definitely going to stagnate. And I think that rents are actually going to go backwards. So really be careful if you're buying up there. Up here, there's not much land, which means that the supply is actually restricted, but there could be more land in the future. But at this stage, there's not a huge amount of supply. They've got a new train line, which has actually been quite positive. Certainly through the Armidale region, it was a hot spot during the boom with investors throwing money there. I personally didn't buy there for my clients, but right now you can see that there's more properties coming up for sale. They are taking longer to sell. And the thing is, the local people, they can't afford the properties there. So that's something to be aware of. And then down south, likewise with up north, through Baldivis region, there's a lot of properties that are reaching completion and also increasing the number of properties for rent. And because they're all sort of 300 square meter blocks of land and very cookie cutter kind of houses, there's not much to differentiate them between each other. So you may find it's a little bit trickier to rent your property out if you buy down there. And also price growth will stagnate a little bit due to the fact that there's more supply coming up and the demand is slowing down. Rockingham as well has slowed down with the rental market, although now that investors are moving away, we may see that stabilize a little bit, making it a little bit easier to rent your properties out. Now, the locations where there's still fairly good demand, and more so from owner occupiers, because a lot of interstate investors aren't talking about Perth anymore. They're talking about other places, which I'll talk about in another video. But if you were buying in Perth, then certainly having them in a built up, solid location for the long term, that's generally where you're going to have the best kind of results. So we're looking at the inner city, and it depends on your budget, of course. But if you have sort of a budget of 8 to 900,000, you can buy in some really good quality suburbs in the inner locations, which means it's going to be less affected by the supply coming up. And even better still, if you can buy a property where you can add value to it, whether you can do a little bit of a renovation or do a duplex development, then that's where you can potentially boost your equity up. So if I was buying right now, I would really aim for a property that meets that criteria, because you can sort of catch the growth that's going to occur this year and potentially next year, and then actually take some action to actually manufacture some equity into that property. Another really popular strategy right now as well is to actually renovate and flip the houses. We're seeing a lot of people wanting to do that. There is houses around, you can get a really great price. I did one myself. I did a meth house. I'm going to make a video on it if you want to check that one out. So that's a bit of an overview of the suburbs of Perth. There's over 300 50 suburbs. I could talk forever, but really the key factor moving forward is you want to buy in locations where there's not a huge amount of supply coming up, in a city as possible. You're not buying in a new estate where there's a ton of supply coming up and also competition to find renters. I hope you've found today helpful, and let's see what 2025 has in store for Perth. Certainly with the decreasing interest rates and home buyer incentives coming out and also the population growth, it's certainly going to be interesting to see what happens with prices. And I look forward to doing a video at the end of the year to see how we went. If you are looking to become a property investor, then I encourage you to do the quick quiz below. You can complete some questions and it's going to give you some actionable insight to work out what gaps you have to become a successful property investor. Again, click the link below. Otherwise, if you are ready and you're looking to buy, whether it's in Perth or across the country, feel free to book in a call directly with me. The link's below as well. Otherwise, have a great day and I wish you every success with your investing.